As of Tuesday, December 23, 2025, reAlpha Tech Corp, trading under the ticker symbol AIRE on the NASDAQ, is currently priced at 0.46 USD, reflecting an intraday increase of approximately 5.43%. This movement comes on the heels of a massive strategic pivot that most investors haven't fully processed yet. While the broader market might look at a sub-$1 stock and see nothing but risk, the reality under the hood is a company aggressively buying its way into a vertically integrated powerhouse. Just yesterday, reAlpha announced a definitive agreement to acquire InstaMortgage for $8.5 million. This isn't just another small acquisition, it's the piece of the puzzle that turns a tech experiment into a direct mortgage lender. The common narrative around AIRE is that it's a struggling penny stock trying to survive a high-interest rate environment. However, the reality is that the company is effectively debt-free after a major restructuring earlier this year and is now using its cash on hand to snap up established players with billions in historical loan originations. This creates a fascinating tension. The market is pricing AIRE like it's failing, while the company is building a footprint that could eventually challenge the traditional gatekeepers of the real estate world. When you look at reAlpha Tech, you're looking at a business trying to do what many others have failed to achieve, making the home buying process as simple as a single app interaction. If you've ever dealt with an individual brokerage, a separate mortgage lender, and a disconnected title company, you know the friction is where the money and time disappear. The expectation for a company of this size is that they would move slowly, but AIRE has been on a tear. In the last months alone, they've integrated Namche, acquired Preview, and now InstaMortgage. This is an aggressive roll-up strategy. While some might be looking at Tesla stock for high beta growth or holding Apple stock for stability, AIRE represents a very different kind of play, a high-conviction bet on the total displacement of the traditional real estate model. If you are currently active in online investing, you likely know that the real estate sector has been bruised by the macroeconomic climate. Many people using investing sites or a fidelity trading platform have pulled back from small-cap real estate tech because the math didn't seem to work when rates were at 20-year highs. But here is the contrarian view. reAlpha is building its infrastructure while the market is cold. By the time the cycle turns and interest rates normalize, they won't be looking for partners. They will own the entire stack. They are moving away from being just a platform and becoming a true operator. They now have licensed real estate footprints in dozens of states, and with the InstaMortgage deal, they are moving into heavy-hitting markets like New York and New Jersey. Institutional activity in AIRE has been a mixed bag, which is typical for a stock in this price range. We've seen names like BlackRock and Vanguard maintaining or even increasing positions in their microcap and total market funds. It's important to note that when you see institutional value being held in a stock like this, it's often about capturing the upside of a potential industry shift. For a self-investing individual, the volatility in AIRE is the price of admission for a company that is essentially a venture capital portfolio wrapped in a public ticker. The recent price action, jumping over 5% today, shows that the market is starting to react to the InstaMortgage news, but the real question is whether they can integrate these acquisitions fast enough to hit profitability. The financial reality of reAlpha is still in its early stages. Their Q3 2025 report showed revenue of $1.45 million. That's a small number compared to the multi-trillion-dollar industry they're targeting, but the trend line is what matters. They've seen 3 consecutive quarters of revenue growth. More importantly, the acquisition of InstaMortgage brings in a team that has handled over $4 billion in loans over the last 5 years. That is a massive scale-up for a company that was mostly a tech developer just 12 months ago. They are shifting from burning cash on research to generating revenue through high-volume transactions. This is the pivot that the market often misses until the numbers show up in a quarterly report that's too big to ignore. Let's talk about the competition for a moment. Most people today use things like a Robinhood app or interactive brokers trading to manage their portfolios, often focusing on big names like Nvidia stock. But when it comes to real estate, the innovation hasn't quite matched the speed of the stock market. You have big players like Zillow or Redfin, but they often struggle with the heavy lifting of the mortgage and title process. reAlpha is trying to build a super app for real estate. Their AI assistant, Claire, is designed to handle the lead qualification and the endless paperwork that usually requires a small army of humans. If their tech can truly reduce the cost of a transaction, they can offer rebates to homebuyers that traditional brokers simply can't match. Comment below how many shares of AIRE you currently hold, or if you are waiting for a specific price target before jumping in. The history of reAlpha Tech is rooted in the short-term rental market, but they've since realized that the real prize is the 80% of the market that still buys homes the old-fashioned way. Their business model now relies on vertical integration. They want to be the realty service, the mortgage broker, and the title agent, all at once. By doing this, they can offer a buyer's agent commission rebate of up to 75%. Think about that for a second. In a world where the average home price is sky high, getting $8,000 back at closing is a massive incentive. This is how they plan to win, not just by having better tech, but by being cheaper and faster than the person down the street. Of course, there are risks that every smart investor needs to consider. Being a micro-cap stock on the NASDAQ comes with compliance hurdles. Earlier this year, AIRE had to deal with the minimum bid price rule, but they've managed to regain compliance and clear their debt. The debt-free status is a huge differentiator. While other real estate tech companies are drowning in interest payments on their corporate debt, AIRE is using its equity to fund growth. This gives them a longer runway and more flexibility to navigate a choppy market. However, the integration of multiple companies in a short period is notoriously difficult. If they can't get the cultures and systems of Preview, GTG Financial, and InstaMortgage to talk to each other, the strategy could stall. Institutional ownership stands at roughly 2.7% with 33 institutional holders. This is a low number, but it's growing. For those who use Fidelity Wealth Management or specialized advisory services, this stock is probably not on their radar yet. It's too small for most large-cap funds. But for the active trader using a SoFi trading platform or Interactive Brokers platform, this is the kind of setup that provides high asymmetry. The 52-week high was $4.49, and we are currently sitting under 50 cents. That is a massive gap. The reality of the company has changed significantly since it was at $4. It's actually a much more robust business now than it was then, despite the lower share price. The recent appointment of Thomas Kutzman to lead the brokerage division as CEO of reAlpha Realty is another signal of their intent. They are hiring experienced operators who know how to scale. The synergy they are looking for isn't just a buzzword, it's about a lead from a real estate search being instantly funneled into a mortgage pre-approval through their own internal system. This reduces the fallout rate that plagues traditional brokerages. If they can increase the conversion rate of a lead by even 10% through their AI tools, the bottom line impact is huge. They've already reported a 90% increase in lead engagement and a 200% increase in appointment conversions during early testing of their AI tools. As we look toward the future, the scenario for AIRE depends on the speed of their national rollout. They are no longer just an Ohio-based company. They are a multi-state operator with a digital-first approach. The acquisition of InstaMortgage is expected to close in the first half of 2026, which will be the next major catalyst. Investors should be watching the upcoming earnings reports to see if the revenue from these acquisitions begins to offset the operational costs. If the market sees a path to profitability, the current price under 50 cents will look like a historical anomaly. For someone looking for investment help or exploring online investing options, it's easy to get distracted by the flashier parts of the tech sector, but the fundamental way Americans buy their largest asset, their home, is ripe for disruption. Whether you use Schwab Intelligent Portfolios or prefer self-investing via Robinhood Investments, the goal is always to find where expectation and reality are misaligned. The expectation is that real estate tech is dead in a high-rate world. The reality is that reAlpha is quietly building a national infrastructure while no one is looking. In summary, the story of reAlpha Tech Corp is one of aggressive transformation. They have moved from a theoretical tech platform to a multi-state real estate and mortgage operator in record time. They've cleared their debt, regained NASDAQ compliance, and now are using a combination of cash and stock to acquire established companies that bring immediate scale and revenue. The tension between its current penny stock price and its ambitious national strategy creates a unique window for analysis. While the risks of integration and market volatility remain, the company's One reAlpha strategy is a clear attempt to own the entire home buying process. The expectation of failure is being met with the reality of expansion. As they move into 2026, the success of the InstaMortgage acquisition will likely determine if AIRE can reclaim its previous highs or if it will remain a hidden player in a crowded field. The move today is a small signal, but for those watching the deeper fundamentals, it's a sign that the strategy is moving forward exactly